Hola, hola, hola. Welcome to Mastering the Sweeps, a Nueva Voz trading series. Here we apply the lighthouse strategy, a disciplined approach to observing liquidity, structure, and probability in the market. Remember, your job is not to try to find trades, your job is to observe the market until it reveals one. So I'm hoping that we're doing amazing, amazing, amazing. And I have something special for you. You know that we are diving into all about liquidity. So I made this PowerPoint with so much intention and care. I took my time to create these examples to really bring it to life. So I hope that you enjoy this lesson today. So let's go ahead and get started because usually I try my best to keep all videos around 20 to 30 minutes at max. So let's go ahead and get started. Okay, so today is all about why most traders lose during sweeps. Okay, so most traders they don't lose because they are completely wrong. They lose at the exact moment they feel really and truly the most right. Like the moment that they are trying to feel confident, there usually is where the mistakes is happening. Oh my gosh. Okay, let me say that one more time. The moment that they are feeling the most confident is usually where the mistakes happen. So today, I want to slow this down for you and show you exactly why that happens. Okay, so let's get started. Okay, so by the end of this, I don't want you to see sweeps. I don't. I want you to understand what's actually happened in that moment. And more importantly, what should you not be doing? Because that's where most people go wrong. Let's really think about this. Okay, let's think about this. So we have dove into equal highs and equal lows. And you know that is where liquidity exists. And if you don't know, that just means you need to go back to the previous lessons. Okay? But we will still break it down. So you can most definitely watch this video. Anybody can watch this video. So yeah, liquidity, where liquidity exists are basically where orders are sitting. So price isn't just moving randomly, it's moving towards those areas on purpose. Now that has been the biggest breakthrough that took my mindset about trading to the next level because I thought always that trading was this random action that just only certain people can make money. No, price do not move randomly. And because it does not move randomly, what's the opposite of random? Structured, patterned base. So if it's structure and pattern based, guess what it is? It's repeatable, meaning you can learn this. All right. So now the real question becomes what happens when price actually gets there? And I'm talking about where liquidity is. Because that's the moment right there, that's where everything changes. And if you want to screenshot this, take this picture. Now, this is the part that most traders understand. When price reaches liquidity, that actually is where people feel the most confident. Remember from earlier? When they were feeling the most confident, what did I say? Most likely they will make a mistake. So please, if you're one of the people who do make those mistakes or do get happy when price is finally at liquidity, please pay attention. Okay, because when price finally reaches liquidity, that's actually where, again, people feel the most confident. But here's the truth, and nothing is confirmed yet. This is not about clarity. This is pressure, because in this moment, your brain is saying, look, I need this money, and it's finally where the sweep is. No, slow it down. Slow it down. Now, they're looking at the chart and thinking, okay, it broke the level. This is momentum. This is the move. And not just the move that's going to get me paid, get me out of all bad situations. I'm going to make all the money that I'm going to make on this one trade. Really think about that. If you are stuck in that mindset, you might as well get into gambling, because that's the mindset of gambling. One trade is not going to just change your financial situation. And if it had that potential, then honey, you are over leveraging. Over leveraging meaning that you're placing too much money on that one trade, which in result will have your emotions all over the place, which in result may make you want to hurry up and get out the market, make you start panicking. It just goes downhill. So no, slow it down. So it looks that way. They feel urgency. They feel like I need to get in this right now. I don't want to miss this. I finally caught the move. That feeling right there, that's the trap. That's the trap. And if you are that person, own it. Own it. So that we can move forward. How? One, through awareness. Two, through practice on developing better skills. So go ahead, take this screenshot. We're changing that for you. So, what do? They enter immediately. They assume direction, meaning that it may continue going higher, it may continue going lower. They just assume. So, if they're assuming, they skip confirmation completely, because in their mind, this is the confirmation. But all price is doing is just moving. And that's exactly why they get trapped. Not because they're careless, but because they're reacting at the wrong moment. Okay, so I want you to look at this. Before I even show you the picture, let's break down this in the top. Alright, so for the people who are just watching the video for the first time and haven't seen it, this is what I call my lighthouse strategy. So we look for sweeps, and we also look for equal highs or buy side liquidity and sell side liquidity. Make sure you learn that, because it's interchangeable with equal highs. They mean the same thing, but are different words. After we locate that, we're looking for a sweep and then the reaction. All right, so here we go. All right, I want you to look at this. Price moves into liquidity, pushes above it. And right there, this is where most traders are entering. So here we go, right here. I'll go, I zoom in. So do you remember, before I dive in a little bit deeper, Buy side liquidity is the same as equal highs. Sell side liquidity is also equal to equal lows. Okay. The reason why the names is basically due to their location. If the market continues to go lower, then it's selling. So the name is sell side because it's literally going to the seller side. If the market is continuing to go higher, it's going, well, yeah, it's approaching or continuing towards the buy side. And the reason why it's called equal highs or equal lows is because of the touches. So this is equal to this, and this is the high, the highest that it has been since being in this range. And the same for your equal lows. So we have a lot of touches here, here, and then a breakthrough or a sweep here. Okay. So when they saw this move, they would have got excited. They would have thought this was a true move. Why? Because technically this was a breakout. And if they were looking at the market while it was breaking out, it most likely would have been a full candle, meaning that it wouldn't have been a long wick. A wick is one of the straight little lines. Okay. So they would have thought this area would have been the breakout, but what actually just happened, liquidity got taken. That's it. This is why it's very dangerous just to assume. You must wait, okay? You must wait. So most likely your brain will be asking, look, it looks like a breakout here. Or where would I enter? No. Now, this is the shift I need you to understand. A sweep is not the move. And I know I keep saying this, but it's just so important for you to understand this essential part. Because if you can understand the sweep, then you can understand the strategy. Because it's what happens before the move. Think of like a sweep, the equal highs or lows or buy side liquidity, sell side liquidity as kind of like a flag of just saying, hey, look at me. I may be doing something. So if you treat it like confirmation, you're always going to be early. Always. And honestly, the sequence is simple. Price approaches liquidity, and then it takes it. And then, this is the key right here, it becomes unclear. What would you do then? So now that you have saw that the market swept, and now you don't know what to do. So let's dive in. Okay. I want you to really look at the structure. Don't rush it. It approached many times. Just watch watch this magnifying glass. Then it swept. Then the reaction. So again, it was approaching, because of the touches. It finally swept here, and then it had a reaction. So just imagine if you were one of those people who was trying to get in early for a sale, and then continued higher. So, this is why I say if you don't see this clearly, don't assume anything yet. Your job is to wait, especially if it's not clear to you. So, again, the strategy or the sequence is approaching, sweep, reaction. So, after the sweep, price can go anywhere. It can continue, it can reverse, and it can move sideways. There is no confirmation here. And then nobody in the market knows exactly what the market will do. So no one will know. So this is why you must have your confirmations in place. Because honestly, it could. Let me go back to the picture. It could have continued to sell. It could have continued to go sideways, which is a consolidation. Or, like it did, it reversed and continued making higher highs. There is no confirmation. All right. So this is all about the post sweep, meaning after the sweep. Okay. So this right here is where discipline shows up, because this is a moment where most people feel uncomfortable because it's still not clear, it's still not clean, and that's exactly why they try to force a decision. So when you continue, or just watch now because I'm going to break it down, because this is the sequence of the lighthouse strategy. All right, so we already had a buy side liquidity. It finally took it, okay, and then it had its displacement, meaning it returned higher, it made higher highs. But after all that, guess what it did? It ended up being in a range. You don't see like true structures. They're smaller candles, and again, no true direction yet. So what will you do? You wait. If you did not know the answer, you literally wait. And look what's on my next slide. You observe, meaning you look. Then you must wait. And then you must do nothing unless you have your confirmations in place. Okay? Because your role is different. You're not here to react like the other people. You're here to observe. You're here to wait. And yes, sometimes that do means you don't do nothing. You don't get into the trade, but you want to be able to, you know that phrase, you want to live to see the other day. Well, it's the same in trading. You want to be able to protect your capital in order for you to be able to trade another day. Okay. So, most traders change their behavior in this moment. They feel the pressure, so they act. You don't. You stay the same. They feel triggered, but you see structure. They want to jump in early. You wait for confirmation. They have no edge, they just guessing. Your edge is real. You have a strategy in place. Their outcome is trapped, taken, lost money. Your outcome is positioned incorrectly. And even if the market still takes your money, do not think that it's your strategy. Sometimes it does happen. Just think about when you were riding a bike. When you got on a bike, the first few times or the first few months, you just, rode it very, just rode the bike. I want to say fluently, but you don't ride a bike fluently. I'm all the way in my trading language and Spanish language, or just language in general. I don't know how to describe a person who continues riding a bike, but just know you're the person who keeps going. That's what I'm trying to say. Okay, so this is your framework if you don't have one, or if you need one. Your framework is your strategy. Okay, you are looking for a liquidity, you're looking for sweep, you are going to observe, meaning look, and then you're going to decide as the market is moving. All right. So when you're in the market, these are how to think. Screenshot this so you can see it. Okay, so like I said before, number one, you are identifying liquidity. Oh, okay. Kelsey, the liquidity is the same as equal high. So I see all these multiple touches that the price did not leave. So I'm going to make a line here and I'm going to label it. That's what I would have done. Okay, Kelsey, I see some lines here that the market stopped. It did not reach high lower. So I'm going to place my line here and label it sell side liquidity. Okay, so I did my first step, which is my liquidity part, identifying it. Okay, so now that I have it, now I'm waiting. Oh, okay. So I'm finally seeing the liquidity sweep. Oh, the market reacted. And then whenever the time closed, it went right back into the range. Oh, I'm so happy I waited. You hear how you're supposed to think? Okay, so now that I waited and I saw that that was only a wick, meaning this long red line, okay. Oh, okay, what's my next thing? Because now, remember, I waited for the sweep. Now I need to observe behavior. What will the market do next? Will it continue going lower, selling, or continue going higher, which is buying? Oh, okay. So I see, Kelsey, that the market wanted to continue going higher. Okay, so now that I observed it. I watched how the price reacts. Okay. Oh, and then look at this box right here. No decisions before step 3. Meaning no decisions to click. All right. So now it's deciding your last thing. Do you have enough confirmation to not only act, okay, but to record, reflect on, and repeat the next day? Because if it's not repeatable, then you're skipping some steps. Okay? So after you decide, okay, after confirmation, then you can act when the direction is clear. Not before, not after. All right, this is my favorite parts, okay? Because now it's your turn. Okay, screenshot this first. All right, so now it's time for you to practice. It's your turn. Go ahead and screenshot this, and I already have your 3 questions there, so you don't even have to worry about it if you didn't take a screenshot. Okay, don't rush this. Look at this chart and then ask yourself these 3 questions. Where is liquidity? Write it down or type it in your notes. Was it taken? Was what taken? Liquidity taken. And then lastly, what happened after? Did it continue? Did it retrace back? Retrace means going back to where it was. That's it. Okay, so today I don't want you trading. I don't, okay, because you're still learning. I want you to open up your chart, find 3 sweeps. You already had your practice before you're going into the real market. This is your practice. And then if you forgot the strategy, rewatch the video, rewatch it again. All right, so your assignment today that I'm going to leave you with, I want you to open up your chart, find 3 sweeps, and just explain them. Because once you can see this clearly, everything else gets easier. All right. So I hope that you guys enjoyed this video. I hope that this strategy is becoming clear for you if you're continuing to follow along in this journey. Please comment one thing that you learned today so that I can continue making this as fire as I can, because not only is this for you guys, okay, it's for me. I love rewatching it. I love learning because I actually made these videos originally just so I can rewatch them and study them. And now that I made it into a PowerPoint, I'm just like, yes, I'll do this for my current class. So now we're taking this to a whole different level, and I'm just so grateful that you guys are just following along. So have an amazing day, and I'll see you next week.